I spent most of my 20s doing everything that I was told was right with money. I worked my tail off, earned a decent income, and I saved as well. But my money was just sitting there in a traditional standard savings account, earning next to nothing. I had this nagging feeling that I was missing a huge piece of the puzzle. It felt like I was running on a financial treadmill, putting in all the efforts but going absolutely nowhere. It wasn't until I figured out how these 6 specific accounts work that the entire game changed for me. These are the 6 accounts that I desperately wish I had known sooner, right? Because they are the secret to making your money finally work for you instead of you always working for it. Hey everyone, I'm Fuanyi. You might think that because I spent years as a budget analyst in the military and also for the US government, that I would have had all this stuff figured out from day one, but no. I was managing massive complex budgets for my job, but when it came to my own personal finances, the truth is that I was just in the same spot that so many people are. In this video, I'm going to be breaking down the 6 most important accounts that completely changed my own financial life. We're going to go through them one by one, no confusing language, so you can go from being a passive saver to an active wealth builder. And trust me, you don't need to be a millionaire to get started. You just need the right roadmap. So if you're ready to take control and give your financial future a serious boost, then stick around because we're getting into it right now. Let's go. All right, first up is the account that you absolutely need to open like yesterday, which is a high yield savings account or HYSA. Listen, this is a new and improved home base for your emergency funds and any big savings goals that you have coming up soon. If your money is sitting in a regular savings account at a giant traditional bank, then it is earning you almost nothing. Some of those big banks still pay rates as low as 0.2%. The national average right now for a regular savings account hovers around 0.4% APY. A high yield savings account, on the other hand, is higher than that. It is exactly what it sounds like, a savings account that pays you a much higher interest rate. As of late 2025, many online banks are offering competitive rates at a 4.2% to a 4.5% range, with some of the top accounts hitting even 5% APY. So let's make that real for you. So if you have $10,000 for an emergency in a traditional account earning the national average of 0.4%, you're going to make around $40 in a year. With a high yield savings account at 4.5%, you're going to make around $450. That is a massive difference for doing absolutely nothing but choosing a better savings account. So use a high yield savings account as your foundation and keep around 3 to 6 months worth of living expenses in here. It is so important because it is both safe and liquid. Your money is FDIC insured up to $250,000, and you can get to that money quickly if a real emergency hits, like a job loss or a surprise medical bill. Also, opening one is easy and comes with no minimum balance or fees. So this is step 1 for you and don't skip it. Next on the list is account number 2, which is the 401k, but specifically one that comes with an employer match. So if your company offers this, it is easily the best deal in all of finance. It's literally free money, and it's shocking how many people leave that money on the table. A 401k is a retirement account that is offered by your employer. You put in a percentage of your paycheck, and then that money gets reinvested to grow over time, tax deferred. But the magic ingredient is the employer match here. Many companies are going to match exactly what you put in up to a certain limit. So a common setup is a dollar for dollar match up to 5% of your salary. So let me explain that, okay? Let's say you make $60,000 every single year. If you contribute 5% of your salary, that is around $3,000. Your employer is going to put in another $3,000 for free. And boom, that is a 100% return on your investment instantly. You're not going to find that deal anywhere else. I guarantee you that. Not contributing enough to get the full match is like actively turning down a raise. It is the biggest financial mistake that I see a lot of people make. For 2025, the maximum amount that you can contribute yourself is $23,500 if you're under 50 years old. Now, you don't have to hit that max right away, but your absolute non-negotiable minimum goal is to contribute enough to get every last drop of that employer match. Okay, now for my personal favorite, which is account number 3, the Roth IRA. Listen, If a 401k match is about getting free money, a Roth IRA is about getting free growth, totally and completely tax-free. This account is an absolute game changer, and I wish I had opened one the second I turned 18. A Roth IRA is an individual retirement account that you fund with after-tax dollars. That means that you pay your taxes now on the money that you put in. And then here's the incredible part, right? All of your money, your original contributions, and all the growth can be withdrawn 100% tax-free in retirement. That's the fun of it. For 2025, the contribution limit is $7,000 for people under 50 years old. So if you start at 25 and you invest that $7,000 every single year, you can have over $1 million in that account by retirement. This next account is the most underrated wealth building tool out there, which is the health savings account, or HSA. Listen, most people think that it's just a way to pay for doctor's visits, but it's actually a secret retirement account with insane tax advantages. An HSA is available to people enrolled in a high deductible health plan. It has what is known as a triple tax advantage. So your contributions are tax deductible, which lowers your taxable income for the year. Your money also grows completely tax-free inside this account, and withdrawals are also completely tax-free as long as you use them for qualified medical expenses. Now, here is a wealth building hack. You don't actually have to use the money for today's medical bills. Instead, you can pay for your current medical costs out of pocket, and then you just keep the receipts. And then years down the line in retirement, you can reimburse yourself for all those old medical expenses that you have saved the receipts for completely tax-free. For 2025, the contribution limit is $4,300 for an individual and $3,500 for a family. So if you're eligible for an HSA, you should be getting it and trying to max it out. Once you're consistently funding your tax advantage retirement account, it is time for you to move on to account number 5, which is a standard brokerage account. This is your engine for building wealth for everything outside of your retirement. So I like to call this one the Freedom Fund because unlike IRAs and 401ks, a brokerage account has absolutely no contribution limit and no rules about when you can put money in or take money out. In the brokerage account, you can invest in anything from stocks to bonds to ETFs, you name it. For most people, the simplest, most effective strategy is to consistently invest in low-cost broad market index funds or ETFs. This account is what separates people who just have a retirement plan from those who are actually building real flexible wealth. By setting up automatic transfers monthly into your brokerage account and then investing that money, you are building a future where you can make decisions based on what you want to do and not what you have to do. Last but not least, we have account number 6, which is a traditional IRA. Okay, we already talked about its flashy sibling, which was the Roth IRA, but the traditional version has a very important role to play, especially for certain people. The key difference is all about the taxes. With the traditional IRA, your contributions can be also tax deductible, which is going to lower your taxable income today. If you're in a higher tax bracket right now, but you expect to be in a lower one once you retire, then this is a brilliant move. So you get a tax break during your peak earning years when you need that break the most. And then the money then grows tax deferred, and you just pay regular income tax in your withdrawals during retirement. The contribution limits for 2025 are the same as a Roth IRA, which is $7,000 if you're under 50 years old. And that limit is shared between the two types of accounts. So why would you use this account? Well, if you earn too much money to contribute to a Roth IRA, then this can be a great alternative for you. It's also a powerful tool for high-income earners who want to reduce your current tax bill as well. Understanding how to use all 6 of these together is what creates the real path to financial independence. Now, don't feel like you need to open all of this tomorrow. Just go ahead and start with one. Open a high-yield savings account this week, okay? And then log in and up your 401k contributions to get the full match. That small action is what is going to kick off your entire journey. You can absolutely do this. I believe in you. And if this video helped you, then give it a thumbs up and let me know in the comments what account you're going to tackle first. Your path to building wealth starts right now. Thank you so much for watching. And I want you to always remember that the best time to invest in yourself was yesterday. The second best time is now. You got this.